The stock market dropped below 11,000 today on a day that saw the blue chip index down more than 600 points at one point. As ABC's Scott Goldberg reports, anxiety has taken over the market in the aftermath of the S&P downgrade of U.S. debt.
With stocks nosediving around the world on the heels of the first ever downgrade of the U.S. credit rating, President Obama is trying to reassure investors.
This is the United States of America. No matter what some agency may say, we've always been and always will be a AAA country.
The market turmoil is largely driven by Standard & Poor's decision to yank America's AAA rating and replace it with AA+, a rating that could fall even further. S&P acted alone. Two other credit agencies, Moody's and Fitch, have so far kept the U.S. at AAA. On CNBC, Treasury Secretary Tim Geithner did not mince words.
I think S&P's shown really terrible judgment, and they've handled themselves very poorly, and they've shown a stunning lack of knowledge about basic U.S. fiscal budget math.
On Good Morning America, S&P fought back.
Well, I think that's a gross exaggeration, actually.
But the head of the agency's rating unit dodged questions about S&P's credibility, about a $2 trillion math error it made before it announced the downgrade, and about its failure to predict the 2008 banking crisis.
We're talking today about our government ratings, the group that I head up. That track record remains very strong.
Still, S&P said it had no second thoughts.
About our decision, absolutely not.
And S&P may not be finished. The company downgraded Fannie Mae and Freddie Mac, which will likely push mortgage rates higher, and it's now looking at local and state governments. Downgrades there could mean a slowdown in hiring, perhaps the last thing this struggling economy needs. Scott Goldberg, ABC News, New York.